the treasury market alone is massive. We have 30 trillion, I think, outstanding debt, and maybe more after today. But it just keeps growing, and you need to have tools to be able to manage those in a more efficient way. So using digital asset rails in TradFi, and I think Canton's well positioned to take that.
Okay, so we've covered the what, a little bit of the why. Maybe we'll talk a bit about the where. So as in, what types of blockchains, these assets might be made available on, or some of the use cases might be available on. So Nadine, you mentioned NAP chain for collateral. Obviously, there's a variety of different kinds of chains: private permission, public permissionless, hybrid chains, things in between. Nadine, can you talk a little bit about how you view the trade-offs between private permission chains and public permissionless chains?
I mean, it's really going to be a trade-off between transparency and scalability versus privacy privacy and compliance. That's at its fundamental core. But the reality is we're going to need a mix of all of it to make it work. So at DTCC, a lot of our infrastructure is built on Hyperledger basically today, but we also support other L1s that are out there. We have been very public with our relationship with Canton, for example, and we're also working with other L1s and L2 providers out there. The idea for DTCC is to have a curated network of L1s, L2s, where we will overlay an orchestration layer on top. And when I say, which is really driven by client demand, what took us to Canton was our clients told us we want to work on Canton, and we will select layer the next one and next one, again based on liquidity and where our clients want to go. But what we're trying to do, we're trying really hard, and we will not pick winners or losers, right? It's going to be really up to the clients to direct us which networks they want to do. What we want to be able to do is facilitate that movement. Now, I purposely am not using the word interoperable because I just don't believe that exists yet, but it's truly interconnected. And as an industry, we do need to work into ease our way into interoperability, which is more than technology. It's around standards, it's around data. There's a lot of other non-technical requirements that need to go in to get us in a true world of interoperability. But we leverage private, we leverage public, we will continue to do so. I don't personally believe there'll be a one chain that will win it all. It'll be an amalgamation of chains. And the way we manage all this is ensuring that at the core, we can track movement in a real-time basis, ensuring the scalability and the security of that network as we move forward. And that's why I think a DTCC curated environment will help expedite adoption and fluidity in the market.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. I try so hard to make content on other projects that I have in my portfolio, but things in regards to Canton Network just keep popping up. So in today's video breakdown, we're going to be diving down the rabbit hole. I'm going to show you guys some research as to why my attention is so heavily fixated on Canton and continuously adding to my portfolio. None of this is financial advice. I'm not telling you guys to go out there and buy Canton. And so you guys just heard this massive confirmation from the DTCC, where Nadine went on to say that what took us to Canton Network was our clients told us we want to work on Canton. That is massive confirmation from an institutional perspective that these banks, for a fact, know about Canton Network and want to work with them behind the scenes. Now, I'm not going to leave the rest of the crypto space out either, because this was huge confirmation for a lot of other potential layer ones that could bring real value and utility to these financial institutions. So this is huge confirmation for other layer ones as well. Don't ignore what she said. There will not be one chain to rule them all. This is, in my personal opinion, just much more solidification to some of the research that we've done in regards to other networks that the DTCC could be interested in utilizing in the future moving forward. And it goes to show that there will not be one chain, one network to rule them all, and that these networks will most likely need to be interoperable and scale alongside each other in the future moving forward. So really great confirmation, which leads me over to this post where I said crypto valuations might recover across the board once risk sentiment flips back risk on, but the assets that will truly thrive into price discovery and blow people out of their shoes once institutional money floods in are the ones that have actually built an incentive for institutions to hold the native token. Tokenomics that actually benefit an institutional holder real network utility, regulatory alignment, and real world usage will be king in this next market cycle.
I do think as we think about sort of distribution and access, certainly what we've seen is being out there and telling that story, right? What the narrative is, why it's important, what the yield opportunities are, what the proper place of the particular token or protocol is as it relates to use cases. Those are the things that the market is going to have to sort of continue to lean into to convince retail brokers, retail investors, et cetera, that these are things you want to own in your portfolio.
I stand by that. I have a firm belief that we are in the process of seeing which layer ones are going to survive and which ones are just going to be speculatively traded, which ones are going to be finally integrated into the traditional finance system, where we're going to see a merging happen and these institutions actually adopt these blockchain technologies at scale, and which ones they're going to leave behind. Because unfortunately, there is going to be a point in time where we see that environment fully materialize. Now, Don Wilson over at DRW, whom we've listened to before, said over the past few months, we've seen crypto prices fall. MSTR trade, that's MicroStrategy or Strategy, that's their ticker symbol, trade at a discount to NAV, and institutions step in as weaker hands exit. Back in December, I discussed these as plausible outcomes on ARK Invest podcast that they recorded with Kathy Wood. The underlying dynamics is that public blockchains, like most financial innovations, move in waves. Trump's pro-crypto campaign pulled in indiscriminate amounts of capital, FOMO, and leverage. That energy expressed itself through inefficient, duplicative DAT structures and new forms of off-chain leverage. At the same time, many large cap tokens have failed to demonstrate product market fit for a credible economic model. I highlighted that in bold because so many people are going to ignore that in this next cycle. He went on to continue and say, I expect the market to become more discriminating. Despite recent underperformance, Bitcoin has established itself as digital gold in the minds of many, mine included. And I expect that view to continue to grow. For everything else, the question is straightforward. What purpose does this token serve? If it's an L1, what are its characteristics and how do the economics work? It's not surprising that two relative outperformers in this period of downturn, Hyperliquid and Canton, are layer ones with clear product market fit and viable economic models. And I've shown you guys that in previous video breakdowns that Canton, even though we saw $1 trillion in market value wiped off the board in over a month, the past consecutive couple of days, Canton was still able to hold on to 20% gains during that market downturn. Nonetheless, we come over here. And this is what I'm talking about, the product market fit. This is happening in real time on Canton, and the fundamentals continue to align in Canton's favor, which is why I'm so bullish long term. Here it says, and this is from Bitcoin News. They put this out just the other day on February 6th. This is from a post from the CFTC, and it says the CFTC expanded its payment stablecoin definition to include national trust banks as issuers. This change aligns with the Genius Act framework and the OCC charters. Future commission merchants can now accept these tokens as margin collateral. If we come over here to the actual announcement from the CFTC, it says the Commodity Futures Trading Commission's Market Participants Division today announced it as reissued CFTC Staff Letter 2540 with a limited revision to the definition of payment stablecoins. The revision specifies that a national trust bank, I highlighted that in purple, may be a permitted issuer of a payment stablecoin for purposes of the no action position. In December 2025, the MPD took a no action position on certain requirements applicable to futures commission merchants that accept non-securities digital assets, including payment stablecoins, as customer margin collateral and hold certain proprietary payment stablecoins and segregated customer accounts. I know that this is a lot of big vocabulary words. Trust me, sometimes it gets a little confusing, but I'll full circle and show you how this aligns with something that was recently announced with Canton. Okay, I'm pleased that the CFTC staff is amending its previously issued no action letter to expand the list of eligible tokenized collateral to include payment stablecoins issued by these institutions with enactment of the Genius Act and the CFTC's new eligible collateral framework. Okay, so we come over here to what was recently announced during that same time frame. Look at this. Okay, look at the dates. The dates are extremely important. This is from a few days after that announcement. Okay, because remember, this was back during December 8th, 2025. And then we look at this a few days after what happens, December 16th, 2025. Okay. The Canton Network, the privacy-enabled blockchain purpose-built for regulated financial markets, today announced World Liberty Finance's intention to deploy its USD1 stablecoin on Canton. This planned integration represents a significant milestone in World Liberty Finance's strategy to expand USD1's reach across institutional on-chain finance and accelerate adoption among regulated global market participants. By planning to launch USD1 on the Canton Network, World Liberty Finance aims to expand the stablecoin capabilities into a regulated, interoperable ecosystem designed for global finance. Canton's architecture allows institutions to settle tokenized assets and stablecoins with privacy control and compliance, enabling a wide range of high-value financial use cases, including, and look what it says, collateralization for derivatives and institutional lending, stablecoins, right? Interoperable on-chain financing across institutions and markets. So think about it. The MPD took a no-action position on certain requirements applicable to future commission merchants that accept non-security digital assets, including payment stablecoins as customer margin collateral. And from the World Liberty Finance announcement, it says collateralization for derivatives and institutional lending is what Canton Network is going to allow via stablecoins. So Canton's privacy-first architecture will enable stablecoins like USD1 to power the next generation of financial applications, from things like intraday repo to digital bond settlement, without compromising regulatory requirements, which is huge. Then if we come back to, if you guys remember, the gentleman from Theramune, okay, sitting on stage from just a couple of months ago, listen to what he said here.
It is evolving. I mean, I guess that really hits on the Canton point too. Can you talk, Mark, about the depth and breadth of participation by partners and investors?
Yeah, I mean, it starts obviously institutional adoption. You look at who's participated in the DA fundraise. You can look at who's on the board of the foundation. You can see the participation in the pipe from last week. It has some real institutional backing. And so that's part of the ecosystem, the community that we're building. And I think the other differentiating factor is, it's not about like, potential or test trades. You're actually seeing real world transactions go on. Like the repo market, you're seeing 6 trillion a month go on that. And I think just digging on that a little bit deeper, and I know there was a panel earlier this morning that talked about it, it's adding economic value. It's not about a momentum trade of like a coin appreciated or pump and dump or anything like that. It's adding actually economic value to the repo market, and it's differentiating it because it's not just making it more efficient, it's unlocking the capability of intraday repo that didn't exist before. So leveraging the technology to really add value. And you think about all the talk of tokenization, 24/7 trading, all of that, that is where we feel very strongly Canton is an L1 that's positioned because of its configurable privacy, which is a key component to our financial markets today. And also the tokenomics, which I think is a unique structure about how it's structured versus just straight inflationary. And our markets are massive. Like the treasury market alone is massive. We have 30 trillion, I think, outstanding debt, and maybe more after today. But it just keeps growing, and you need to have tools to be able to manage those in a more efficient way. So using digital asset rails in TradFi, and I think Canton's well positioned to take that.
Canton's well positioned to take that. It actually has product market fit, considering what the gentleman from DRW said. And he just said Canton is literally providing real economic value to the repo markets, guys and gals. This is huge confirmation. Now, let's go back to the CFTC, because I highlighted in purple a national trust bank. Okay, so specifically national trust banks. Well, if we come over here to the OCC website themselves, you can get the list of all the national trust banks. And just looking at one right here in particular, it says the OCC also conditionally approved applications to convert from a state trust company to a national trust bank, BitGo Bank and Trust. Okay, BitGo. Well, if we come over here, the recent BitGo post from exactly around that same time frame, December 9th, 2025. Right? You see the dates, how they're kind of coexisting, and who is BitGo sitting here interviewing? Well, here we have Eric S., co-founder of digital asset Canton Network, sitting on stage right here, the gentleman from BitGo. Okay, and if that's not oddly coincidental enough, let's go over to the full list of from the OCC.treasury.gov website themselves. And it says an active list as of 1/31/2026. So you guys can see that this is relatively active. And here you can see BitGo, Bank Trust, BlackRock, Citi, Deutsche Bank, Paxos, State Street, the Bank of New York Mellon, Goldman Sachs, Wellington Trust. Remember those names. If we come over here directly to the Canton website, what do we see? Leading market participants completed the Canton Network pilot, a first of its kind program demonstrating the interoperability, there's that word, of 22 independent distributed ledger applications, or DApps, in the capital markets domain. Who did this involve? BNY Mellon, Paxos, Goldman Sachs, State Street, Wellington Management. You come over here, you got Deutsche Bank directly on the Canton website. This is not coincidental, ladies and gentlemen. These partnerships and these interconnected webs are not random. They are all real and happening at a very rapid pace. And so I'm just here paying attention to the details. I thought that I'd piece parts of the breadcrumb together for you guys. Hopefully you all enjoyed. Remember, I'm not telling you guys to go out there and buy Canton token or invest in Canton Network. I'm just here showing you guys why I'm personally doing research on this project. And looking forward in the coming days ahead, if we head over to the World Liberty Forum that's taking place, we know that this is going to be a forum with over 300 global financial leaders set to talk on February 18th, 2026. And if we head over to the speakers list and we scroll right down here, I mean, you can see some of the names: White House, Clear Lake, Capital, Redbird, World Liberty Finance. You have New York Stock Exchange. You got the NASDAQ CEO up here, Franklin Templeton, U.S. Commodity Futures Trading Commission, the CFTC, Goldman Sachs, and right down here, Canton Networks, Yuval Ruse. So with that being said, many blessings to you guys. Be cognizant, be aware out there. Hopefully you guys enjoyed today's research video breakdown. Super great news from the DTCC and the entire crypto ecosystem. If you ask me, it just goes to show that there isn't going to be one chain to rule them all. But I'm definitely fixating a lot of my attention on Canton Network, as I believe it is going to be one of those chains, one of those layer ones that is utilized by these institutions at scale in this new digital era of finance. With that being said, many blessings to you guys. I'll see you all in the next video breakdown.